is the Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoyed this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Tien Wong, a seasoned entrepreneur, venture investor, community builder with over 2 decades of experience leading and funding high-growth technology ventures. Tien is the CEO and chairman of Opus8, private investment advisory firm based in McLean, Virginia, focused on life sciences, health tech, and marketing tech. Through Opus8, he helps connect institutional investors with top-tier startups by offering strategic capital and fundraising advisory services. Tien, thank you for joining us.
Thanks for having me, Hall. Pleasure to be here.
So where does this podcast find you today?
I'm in Washington, D.C.
Great. So let's talk about your work with Connectpreneur. You know, the evolution of Connectpreneur is a premier networking event for startups and investors. So tell us more about it.
Yeah, we've been doing Connectpreneur now for 14 years. We started with in-person events in Virginia, and then we gradually expanded into Maryland and then D.C., and the pandemic hit, and then we went virtual. So now we're running the world's largest virtual pitch events, in addition to going back to 8 in-person events per year, mostly on the East Coast, Mid-Atlantic area.
And so what are some of the key trends you're seeing in the early stage capital formation, say across the Mid-Atlantic region?
The trends today is that we're still in a winter, funding winter. It's pretty rough. I think I just saw the data from, I think PwC or Carta, first half of this year versus first half of last year is actually down. And last year was not an easy year at all. You definitely are seeing a higher bar and hurdles that investors are requiring now in order to come in terms of, let's say if it's a SaaS company, ARR to valuation, those ratios are pretty much down about half, roughly speaking. That means the bar is twice as high as it used to be. So deals are still getting funded. There's still a lot of money in the marketplace, but I think the standards are higher, and I totally get it. The investors have gotten burned. They've been subject to some down rounds. They have a lot of options now, and things are taking much longer than they have in the past to get funded. So if you have any founders listening, just hang in there, keep building, keep selling, try to get as much traction or, light at the end of the tunnel as possible so that you can attract investors.
So you have a background as a serial tech entrepreneur. How does that inform your investor matchmaking approach?
That's a great question. I'm not sure it does, except for the fact that we know technology a little bit, and we have a great network of advisors and ambassadors who are deep in different areas of technology. But as a CEO or as an entrepreneur myself, and then kind of going into matchmaking, maybe just, I would say, customer focus. When I ran my business, we were extremely focused on customer and making sure our products and services were good to the customer. And the same thing we do with our events. We want to make sure that the customers are happy, the attendees are happy, the founders are happy, the investors are happy. So whatever we can do to improve their experience with us and facilitate outcomes for them, which is usually finding good deals, we'll just try to do what we can to make that happen.
Well, so you built and exited multiple companies. For today's founders that you deal with, what do you think they often overlook in that equation?
In terms of which aspects of that?
Building a company to exit, I guess, is the question.
Yeah, I think, well, okay. I would say one thing we did was we built a business without an exit in mind. So I know that there's a school of thought out there that says build the business to sell it. And then, my experience was I built a business not intending to sell it because I was relatively young. I was in my 30s when I built the company, and when I sold it, I was 40, so relatively young. So we never really had the desire to sell it until maybe a year or two out from selling. So I think if you just focus on making the customer happy and profitability, we were a tech-enabled services business. So, we were very focused on profitability in the form of accepting business that was not unprofitable or that had a minimum standard of profitability. Having that discipline to say no, I think helped us a lot. But, and there's a lot of founders out there, I'm sure, that listen to your podcast who are in the product space or services space. But, I think the advice I would have is the same, which is try to build the best company you can, making the customers as happy as you can. while remaining profitable. And hopefully you'll grow and then the rest takes care of itself.
Well, you're a long-term fundraiser, and so am I. And one of the things I find people don't quite get about that process is the importance of a relationship. You have to build a little bit of relationship with the investor along the way. What are some strategies you use to grow that authentic investor-founder relationship? Something that goes beyond the pitch event.
Yeah, I think the word you used there that's operative is authentic. And there's no real secret. It's hard to automate that. It's hard to hack it. Yes, you can automate it to find investors, but then good luck getting them to return your calls. So you do have to build these relationships one by one by one, email, Zoom call, meetings, networking, conferences, whatever it takes. And it takes 7 or 8 touches before they even know who you are and your name. So it's just part of it. I think, you and I are not spring chickens. We've been at this game for a long time. And, people always ask me, like, how have you built such a big network? And I said, well, I'm older than you. I'm a lot older. I've been doing this for 40 years. And when you're in business for 40 years, you're going to meet a lot of people and you'll have thousands of interactions. And hopefully a lot of these people will like you and respect you and you can help them. And you've built that trust. So I don't know if there's a secret to it, Hall. I really don't. I think it's all about grinding it out, doing good for people, giving before you get, and being authentic, like really take an interest in helping people. And whether it's an investor or a founder, pay it forward. And definitely I'm a believer in karma. So I think what goes around comes around. And if you're good to people, the life will be good to you too.
I think that's true. If you give first and you help the investor as a founder, you're in a much better place than if you're just asking for things first. It's always kind of tough with that. But I think that's a good point.
Yeah, I mean, I like with my team, we do a lot of work for founders, for example. We'll give them an analysis. I give them a list of investors and I tell my team, like, the worst thing that happens is they don't hire us or they don't work with us, but we help somebody. That's the worst case. We helped someone. So that ain't so bad.
No, that's still good things there. So, how does Connectpreneur support diverse founders and how do you help underrepresented people access capital?
So we're intentional about our presenting companies and our attendees, and we are definitely doing our best to have diversity because we do believe that diversity leads to better influence, better outcomes, and it makes for a different, when you have a diversity of opinions, you learn more and you actually make better decisions. So at Connectpreneur, we've been lucky because we're here in the Washington, D.C. metro area, which has a lot of diverse founders. We have a lot of diverse investors, and naturally that happens. And we also actively and intentionally seek founders from diverse backgrounds because they, while underrepresented, also have something that the average doesn't have, which is grit. Especially immigrants, we've found some of our immigrant founders, tremendous grit. They're willing to work, 80 or 90 hours or more per week. They left places that they didn't want to live to come to this country and make a new life for themselves and went to school and started at the bottom and worked their way up. And that's really hard to duplicate. These guys are hungry and I think that's one thing we look at. And on the investor side, we do have a lot of investors in our community, and they're also share the same mindset that they want to invest in a diverse set of companies because they found it in their portfolio management that their returns are better.
That's right. So you were doing it in person like I was before the pandemic, and then we were all doing it online during the pandemic, and then coming back out, we're doing a mixture there. What do you think is the value of the in-person versus the virtual events in this now post-COVID fun landscape?
Yeah, I think right after COVID, virtual was still hot because virtual was the only thing you could do during the pandemic. And I think people were still, accepting of it, right? As a way to interact with people. And frankly, we've gotten a lot of companies funded virtually, and they did meet in person before the funding, but they did a lot of the work on virtual, on Zoom, and that would have never happened before the pandemic. Usually you have to sit face to face, multiple rounds of diligence and meetings and whatnot. I'm finding that now people are getting Zoom fatigued. So you're seeing less and less interest in Zoom meetings, not to slam on Zoom, but I mean virtual meetings. And in person is strong. I think people do crave that. They do crave that sort of personal space, that intimacy that human to human interaction that you cannot get on Zoom. And, what I like to say is for people I know well and for my friends, Zoom is perfect. We don't need to drive half an hour, park the car and all that stuff, deal with the hassles of getting together if we have a relatively less important meeting. But for strangers, I think definitely people that don't know each other very well in person is hard to beat.
Great. And so we're seeing a number of verticals here that keep appearing. AI is one, climate tech's coming back, digital health is always strong. What's your take on those verticals out there? What's the focus you see from investors or trends you're seeing with these sectors?
Yeah, AI is hot, cyber is hot, personalized medicine, digital health, very hot. Yeah, these areas that you're mentioning they have one thing in common, which is that they're leveraging pretty much groundbreaking and disruptive technology to enhance the human condition. So you take digital health, for example, there are so many inventions and so much, power and money going into helping people live longer, longevity because of different things that can be customized. There's different treatments. I think that also has to do with the pandemic because, during the pandemic, we saw a tremendous amount of investment going into healthcare in general and life sciences. But, yeah, the market is still pretty frothy for certain sectors. And despite the winter, really good companies are getting funded. So I think that wherever you have a major disruptive idea, and AI is really a horizontal technology. I think, yes, there are peer play aspects to it, but those require, billions of dollars of investment. But but it's definitely a horizontal technology, much like cloud was and virtualization, say 10 or 12 years ago. And it's going to be a ubiquitous part of every single, business out there.
Well, great. Well, you've been running your program for some time now. How do you build trust and traction among a variety of different investor types in the early stage? Limited partners, venture capital, angels, syndicates, even in a regional economy like yours. How do you get them all to work together?
So I think it starts with quality. We have to have the best companies present. So we do have a pretty stringent committee review and approval procedure. We also partner with some groups that have done some vetting also, including you guys and Keiretsu Forum and others. And, we like to send our best companies to each other. And that having high quality product is one way to build trust. It's like if you have a restaurant, right? High quality food will build trust among your customers. So if I want my investors to show up every month or whenever we do events, we have to have something in it for them. And what's in it for them are great investment opportunities. So if you do this over time, eventually you get a brand and a reputation as a group that is a high quality shop that has, high quality presenters and high quality attendees as well. And you sort of let nature take its course and the rest takes care of itself usually.
That's great advice. So, what's your vision for scaling Connectpreneur and expanding its influence on the national scene?
Yeah, so we are getting more and more into healthcare and life sciences. I'd say about half of our business now, maybe a little more, is healthcare and life sciences. We're also expanding outside the Mid-Atlantic. So we've been hosting large-scale investor events in San Diego, San Francisco, LA, Orange County, and Boston and New York, among other markets. So you'll probably see us expand nationally, not with events that are sort of scheduled regularly like our East Coast events are, but more on a one-off basis. So if there's a big conference, say in San Francisco, we might do a side-by-side investor event. We have very strong relationships with thousands of investors, and that's sort of where we're focused is more on the investor side, bringing investors to the table. So because they want to network with each other also. So we've been able to do some of that, possibly do something internationally down the road in the next couple of years. There are certain markets that, we're seeing pockets of activity that we're interested in. So, but right now I'd say about half of our business is maybe almost half is in California,
Great.
even
Well, we
though,
see some interest internationally as well. What countries do you find interesting?
well, certainly UK, Australia is very hot right now,
Mhm.
Singapore and Korea. So we've done some business. We had meetings outside the Opus8 company that owns Connectpreneur. We've had business in overseas in Europe and in Asia. So we've gotten a little taste for, certain hotbeds of technology and investment. So not that we're actively going to those markets yet, but we're definitely considering it.
Well, that's great. Well, in the last few minutes that we have here today, what else should we cover that we haven't?
That's a great question. I have so many things to talk about. But in terms of the, founders and whatnot, I think, Maybe one thing I'd like to talk about is sort of keeping your head up and not getting too stressed out about what's going on. I mean, I know that a lot of your clients and people that come to the 10 events, and we've had the pleasure of working with you in the past, and thank you for that. But I think that a lot of the founders are getting frustrated and they're getting stressed out. And I just hope that the market will turn. I mean, I'd like to get your take on where you think, when is this winter going to start thawing? You know, when do things get better for founders right now from an investment standpoint? And then, how are you keeping your founders and your clients from getting too stressed out about things?
Yeah. On our side, I'm finding most of the tractions with angel, high net worth, and family offices, less so for the venture capital. I think they got head over skis during the pandemic, putting out too much money at too high valuation. And limited partners are the kind that if they don't get something back, they're not putting anything more in. And so we always had to be cognizant of that. And I think that's the part that's slower than most, is just the VC side of it. And it'll eventually work its way out of the system. But for now, we're breaking raises down into smaller rounds, doing more angel group, because they're still around. They're still doing good things. They do want more, like everyone else does. They aren't taking super high valuations like they also did during the pandemic. We coach a lot of entrepreneurs on that. Yeah, that may have worked back then, but it's not going to work now. You're now out of market. So we also have to set the expectation of the founders. It's going to take a little bit longer, but if you have a quality deal, you will pick up money. We see that every day. You just have to build a little bit stronger relationship, have a little bit better story, and a little bit more market rate valuation also helps.
Yeah, I know those are all great points. And actually, it's funny, I was up in Boston at Bio and met with a number of venture capital funds too, because we help venture capital funds raise money, and they're all looking for money. So, yeah, the LP market is also in a winter situation. So everybody, even though there is money out there, there's still people looking for money. And I think what happened was maybe, during the pandemic, we put what, 3.5 trillion into the economy, and that kind of just flushed. Everyone was flush and valuations went up, assets were inflated, and now we're seeing the reverse of that. Sort of, the Newton's law, third law. It's for every action there's a reaction, and this is a reaction, and hopefully that reaction, comes to an end relatively soon. But yeah, I think it's just patience and stay optimistic and focus on what really matters. If you're a founder, and don't
Absolutely.
give up
That's great advice. Mhm.
pursuing your dream. Yeah.
Yeah. I want to thank you for taking time to join us today. How best for listeners to get back in touch with you?
I have a website, www.opus8.com or connectpreneur.org. And my email is twong@opus8.com. And yeah, feel free to reach out to me anytime, and I'm happy to chat. My Twitter handle is Tien Wong, Tienwong. I'm also on LinkedIn and Facebook and the usual social media channels.
Great. Well, we'll put your contact details in the show notes. I want to thank you for joining us today and hope to have you back for a follow-up soon.
Thank you so much, Hall. Appreciate you, man. Thank you.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Hall T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.